Ladies and gentlemen, welcome to our weekly investor update. I'm your host, Justin Scott, investment banking analyst, and we're happy to be back to bring you another investment update today. Joining me today is Junior Roberts, my investment advisor and co-host for today. Junior?
Great to be here.
Today we're discussing INDIES Pharma Limited and JMMB, and we're excited to share these insights with you. If you like the content, don't forget to hit like and share this video. If this isn't your first time here, then be sure to subscribe and hit the bell to receive all notifications. We upload content just like this once per week. Also, if you'd like to embark on your first investment journey, you should take a first step with Mayberry and follow us on social media to learn more about how you can get started with us today. So, to start things off, I'll go ahead with INDIES Pharma and tell you guys all about what they've been going on with recently. For those who don't know, INDIES Pharma specializes in distributing and retailing prescription, over-the-counter generic pharmaceutical drugs. Their primary location, their head office location, is in Montego Bay, Jamaica, and have since then branched out and have a presence in all 14 parishes in Jamaica, right? They're incorporated in December 2003 and have since gone on to list on the Junior Stock Exchange in August 2018. And since then now, let's take a look at the most recent numbers. So revenues are up 17%, moving from $487 million to $570 million. Gross profits are in line with that, up to 17%, up to $398 million. And admin expenses are up by 14%, all the way up to $247 million. Now, this increase in admin expenses is likely due to a reclassification in how they're accounting for their royalty fees to their parent company, BioPrist Holdings, owned by the same Dr. Ganimopuri. As well as other things like subject to inflation. They recently increased their wages for their employees and other relevant people within the company, and things like that, especially related to their logistic costs, which have gone up significantly. As a matter of fact, the CEO, Dr. Mopuri, went out and said that in the December time period, they're having some logistical issues, receiving some of the inventories from overseas, and that really kind of ate into how their sales went in the first quarter of the year, January ended. So since then, they've actually gone on further to ensure that their warehouses and their inventories are up quite significantly. As a matter of fact, up by $64 million in inventories from the first quarter ended to now. That's around like an increase of 25% of the total inventories. So the profit from the operation for the 6 month ended is up to $179 million. That's up 46%. And the net profit for the year is up 51%, up to $133 million. Pretty good quarter for them this time, really pulling up the weight. If we take a look at the balance sheet or marketing a little bit earlier, they increased their inventories a little bit more significantly, up to $2.3 billion. Total liabilities are down 13%, up to $997 million. Majority of that is a long-standing loan that they have through Sagicor Bank that's supposed to mature on September 2025. It's 7% per annum. Let's see if they decide to roll it or if they decide to just go ahead and pay it out. Because they do have a significant cash balance at about like $234 million cash. They could go ahead with whichever way they want to restructure the debt at that point. But moving on, shareholders' equity is up 24%, up from just a bit over $1 billion to $1.35 billion. Let's take a look at the key statistics. Current price is about $2.65 as at the close of June 25th. The PE ratio is 13.85 times, a little rich for the junior market as it is right now. But INDIES has a bit of stability that they kind of maintain. You'll see when I get to the share price movement graph. The trading EPS is 0.19 cents, and from a 52-week high of $3.53 and a 52-week low of $2.25. INDIES tends to maintain that band, as I'll show you a little bit further. With the market cap of $3.5 billion, INDIES has done really well in terms of how they continuously grow and how they maintain it. Because pharmaceuticals, it's consumer goods. The nature of their business kind of stands throughout the fluctuations through the economy. Whether things are doing great, whether things aren't doing so great, as long as they maintain the customer base and continue to grow their customer base. Now moving on to the quarterly profit movements, as you can see, the nature of the business is a little bit cyclical, with the third quarter, which is the May to July period, typically doing the best for them. They had a little bit of fluctuations with the top line in Q1 for 2024, but they really managed to make it up in maintaining that level of profitability, which is even above the previous two first quarters from the last 2 years. And they've gone on to maintain it quite well with a little bit of a dip in the fourth quarter. So it's pretty cyclical in what you can expect for it. Currently where they stand right now, they may pay out they actually had a meeting on the 21st of June to decide whether or not they're going to be paying out a dividend. And we'll be expecting the results of that meeting quite soon to see if they're going to go ahead with it. And if they do, I'm expecting maybe around like a 11 to 13 cents payout. Historically, that's how they've been paying out dividends over the last couple of years. Moving on to share price movements. June 30th, 2023 was the highest in the last 12-month period of about $3.46. And since then, it's kind of trickled down to the current price that we're seeing now of $2.65. Over the last couple of years, I know personally that Indies, like once dip below that $3 mark, it would shoot right back up. There was a little time we could collect like a nice 5 to 8% on that consistently. But since then, I think with the current market paradigm we're in right now, especially relating to Indies, they're a bit below what their usual baseline is, but they do tend to be within a very tight band that they trade at. So for Indies, I definitely like how they're operational. I like how they're set up. Not super convinced that they're going to be explode in profitability anytime soon, but they're very consistent as long as they continue to expand. Maybe they want to use some of the cash and the position and the strength of financials they have right now to acquire another pharmaceutical company, perhaps get a better distributor, something along those lines to really push the line that they're at right now to really shoot out from there. But those are my views on Indies. Junior, any words on Indies Pharma for me?
Yeah, company still has about 4 years within that bandwidth of being listed on the stock exchange and having that tax break. So for persons who are first-time investors looking to get into Indies, you would be getting the stock at a reasonable rate because you have persons a year ago that would be getting the stock at least about $3.50 near $4. So you get the chance to buy in, and as Justin just shared, they trade within a tight band, so you can look forward to when the market turns to get above that $3 mark.
All right, nice views, Junior. Nice. With that, we'll be moving on to our second half of the segment, getting into JMMB. Junior, what do you have for us today?
Let's jump into year-end report for JMMB. So their year ended March 31st, which would be their Q4. So it means that their Q1 would be between April and June, right? So reporting on screen, you would see they boasted gross revenue of $53.8 billion, an 11% increase over year 2023. Net profit overall for the year was $11.8 billion, which was a increase of 1,619% over the previous year, 2023, which was only $689 million. Net interest income was $9.1 billion, right, which was a slight decline by 18% over 2023, which was $11.1 billion at that time, sorry. You have total assets standing strong with a positive change of now being 675 billion, coming from 649 billion. So they've increased their asset base and also increased their shareholder equity by 43% year over year, now being at 53 billion, coming from 37 billion previous year. So on screen, you'll see the quarterly profit movements or loss in some cases. But here's what I would like to point out. So remember sharing that Q1 would be about, April to June thereabouts. So their Q4 is pretty much January to March. So Q3 seems to be their best over the last 2 years, performing quarters. So we're looking forward to seeing how JMMB will turn around in the quarters to come for the new financial year. As shared before, the net profit for the year was positive at 11.8 billion, despite the Q2 dip by 693 million and the Q4 dip by 5.1 billion. So we still averaged 11.8 billion in net profit over the year. Here we have the stock price movement over the last 12 months. And in January of 2023, we saw the highest trading price at $35 per share. And we closed June 25 at $25 per share. So a steady decline by about $10 dip. I should share while I'm here that June 19, the board has approved for a dividend payment of 25 cents per share. So it's about a 1% dividend payment, 25 cents per share, and the record date will be July 4th, and the payment date will be about August 12th. Back to the stock price movement. Current price being $25 a share with a PE of 4 times and a market cap of 49 billion 2024, and we're looking forward to see what the fiscal year 2025 looks like for them with some plans that they have in the pipeline. Bear in mind, for new investors looking to buy into JMMB, that they do own 23% of the Sagicor Financial Group, which also contributed $20 billion to their performance revenues over the year 2024. So we're looking forward to see what that would bring to the table. And their net profit did surge over the year by 1,800% increase. So that's significant year over year from 2023. So a lot in store. They do have territories across the Caribbean, for those who might not know of, the different countries that JMMB operate out of, primarily Trinidad, Domrep, and Jamaica. And they have a very diverse portfolio with real estate and the acquisition of an insurance company recently. So do stay tuned as we hope to have Group CEO Mr. Keith Duncan himself come and share more in-depth insight to enrich our viewers. So that's it for JMMB. Justin, any take?
Yeah, Junior, thanks. So JMMB is I know it's a fan favorite to a lot of our viewers, a lot of people in the industry, but I am looking forward to see how they try to navigate the current waters that they're in right now, especially with such heavy operating expenditures and just try and maybe shift the nature of the operations just a little bit more, because that was a heavy loss we'd have suffered without the addition of the share of profits from Sagicor, as well as a bit of the tax credit that really kept them afloat get the net numbers that we're seeing here, but those are all non-cash as it is. So I really would love to see how JMMB navigates the waters, as I said earlier. And so I'm sure we can all look forward to our discussion with Mr. Keith Duncan, so we can ask him a lot of these pressing questions very directly and get such a high-level answer from someone who oversees the whole group. So definitely looking forward to more from JMMB. And I want to see exactly where this turns out for them. But once again, good on them. That acquisition of Sagicor really, really helped out in the long run, for sure. So, moving on. That's it for today's discussions, everyone. I'd like to thank all of our viewers for tuning in today. Your support is always appreciated. I would also like to thank my co-host, Junior, for contributing to today's discussions. And if you're curious about updates on the Virtual Investor Forum, then find us on our social media. We share our live stream dates and upcoming guests on our official social media pages. Give them a follow and stay on top of all things forum related. Also, once again, don't forget to subscribe to our YouTube channel, Mayberry Investments Limited, and click the bell to receive all notifications. Keep safe. And remember, wise investors, slow and steady wins the race.